Hi, this is Tom Gibbons with PRMG, and here's your mortgage and housing market update. If you're thinking about buying a home, refinancing, investing in real estate, or simply trying to stay informed about where mortgage rates and the housing market may be headed, this video is for you. Let's start with inflation. Inflation remained elevated in May, with consumer prices rising 0.5% for the month and 4.2% compared to 1 year ago. Much of that increase was driven by higher gas and energy costs. However, core inflation, which excludes food and energy, rose at a more moderate pace. That's important because it suggests broader inflation pressures remain relatively contained. Now, why does inflation matter? It's because it's one of the biggest factors influencing mortgage rates. When inflation remains high, it becomes more difficult for rates to move lower. The producer price index rose 1.1% in May and 6.5% from a year ago, with energy costs accounting for much of the increase. These reports will continue to be closely monitored by financial markets and the Federal Reserve. The Fed's job is to balance inflation while supporting a healthy labor market. Now, with inflation still above its long-term target, investors will be watching next week's Federal Reserve meeting led by Fed Chair Kevin Warsh for clues about the future direction of interest rates. Turning to housing, there was encouraging news for buyers. Existing home sales increased 3.2% in May to an annual pace of 4.17 million homes, marking the strongest pace since December. Inventory also improved, climbing to 1.55 million homes available for sale. More inventory is good news because it gives buyers additional choices and can help reduce some of the competitive pressure we've experienced over the past several years. Now, in Rhode Island, inventory remains limited in many communities, helping support home values. In Florida, many markets continue to see inventory levels improve, creating more opportunities for buyers and additional negotiating power in certain areas. On the labor front, new unemployment claims increased for the third straight week to approximately 229,000. Continuing unemployment claims remained elevated at 1.795 million, suggesting some job seekers are taking longer to find employment. While the labor market remains relatively healthy overall, any signs of slowing could become important for future Federal Reserve decisions and the direction of the interest rates. So what does all this mean for home buyers? The housing market continues to move forward despite economic uncertainty. Buyers who are prepared and pre-approved may find more opportunities as inventory improves. And while nobody can predict exactly where rates will go next, waiting for the perfect rate could mean missing the right home. Now, if you found this information useful, click the subscribe button and I'll see you on the next one.